Welcome to the Big Four Accounting Firms podcast, brought to you by big4accountingfirms.com. In today's podcast, I wanted to talk a little bit about the structure of the Big Four accounting firms because I was reading through the PwC revenue report, the global annual review, and there's a disclosure before it starts about the structure. And it's very interesting as they spell out the structure. And I wanted to speak about this a little bit more so people are a little bit more educated because I think people get confused about the Big Four accounting firms and they think of them as multinational corporations. And although that might be how they operate, that's not actually their structure. So let's see what PwC has to say. PwC says that they're a brand under which the member firms of PricewaterhouseCoopers International Limited operate and provide professional services. Together, these firms form the PwC network. PwC is often used to refer either to individual firms within the PwC network or to several or all of them collectively. In many parts of the world, accounting firms are required by law to be locally owned and independent. Although regulatory attitudes on this issue are changing, PwC member firms do not and cannot currently operate as a corporate multinational. The PwC network is not a global partnership, a single firm, or a multinational corporation. For these reasons, the PwC network consists of firms which are separate legal entities. The firms that make up the network are committed to working together to provide quality service offerings through clients throughout the world. Firms in the PwC network are members in or have other connections to PricewaterhouseCoopers International Limited, an English private company limited by guarantee. PwC-IL does not practice accountancy or provide services to clients. Rather, its purpose is to act as a coordinating entity for member firms in the PwC network, focusing on key areas such as strategy, brand, and risk and quality. The network leadership team and board of PCIL develop and implement policies and initiatives to achieve a common and coordinated approach among individual firms where appropriate. Member firms of PCIL can use the PwC name and draw on the resources and methodologies of the network. In addition, member firms may draw upon the resources of other member firms and or secure the provision of professional services by other member firms and or their entities. In return, member firms are bound to abide by certain common policies and to maintain the standards of the PwC network as put forward by PwC-IL. PwC is not one international partnership, and PwC member firms are not otherwise legal partners with each other. Many of the member firms have legally registered names which contain PricewaterhouseCoopers. However, there is no ownership by PwC-IL. A member firm cannot act as an agent of PwC-IL or any other member firm, cannot obligate PwC-IL or any other member firm, and is liable only for its own acts or omissions and not those of PwC-IL or any other member firm. Similarly, PwC-IL cannot act as an agent of any member firm, cannot obligate any member firm, and is liable only for its own acts or omissions. This episode is brought to you by Boomer. Boomer helps you ace the interview at the Big Four accounting firms, and it does this by helping you practice on questions typically asked on the Big Four interview. And if you use the link or promo code which goes to tryboomer.com/big4, or the promo code BIG4, then listeners get 10% off their purchase. So go ahead and check out their website, tryboomer.com, and see if you like all the tools they have that can help you prep for your Big Four interview, and you do choose to purchase it. Make sure to use the link in the show notes, because with that link, you're going to get 10% off, or make sure to use our promo code. All the details are in the show notes. Why did I want to go over that? I wanted to go over that for a few reasons. I think there was a comment the other day on a video about how does PwC or how does Deloitte have more than one CEO? And they have more than one CEO because of this thing. They have a global CEO, which is over this basically brand entity, and then they have local CEOs in each country. So, and the Big Four accounting firms are structured this way, and it makes it the way they run is a little bit confusing because the partners are like tons of executives. It's like you have 1 million executives versus a few executives that you would normally have at a corporation. And so people just have to get used to that, because I don't think people are aware of how the big four accounting firms operate, at least from an outside perspective, and they don't realize how like not coordinated the big four accounting firms are. People think that it's this one corporation and they're highly coordinated, but they're not. And even clients run into this. When clients ask questions, they're like, "Oh, did you coordinate with the foreign team in the UK or Australia?" And you're like, "Well, no, I don't coordinate them because they're not really part of our team. Yeah, they might be on the global audit or engagement, but that doesn't mean that I work with them every day. And to network with them is pretty difficult because that's not really the way the big four accounting firms operate. They operate within their own regions. They have regions, industries, and specialties. And typically they operate within their specialty first, and then within the industry, and then within the region. So that's something to keep in mind if you're looking to work at the big four accounting firms, or if you already do, and you run into a lot of headaches. And I know a lot of clients don't like the way they operate either, and they wish there was a lot more access to the network. But it's because of this structure that makes coordination very confusing. And there's a lot of verbiage in there about strategy and policies. And I think they might share strategy and policies, but I think the main thing they share is the brand. And the big four accounting firms like to take advantage of good things happening to the brand, but then they don't want to take advantage or take credit for the bad things, because regulators want to go in and grab all the revenues of PwC if PwC does something wrong, or any big four accounting firm. But they can't really do that because of the structure that they talk about here. And the structure has to do with regulation, but also probably getting insurance on the, as they said, acts or emissions. And that's why they use that phrase, acts or emissions, because it's really a legal and insurance phrase. And this can also make recruiting with the big four accounting firms frustrating, because you're dealing with these member firms, but it's also something to keep in mind, because if you're not able to recruit with one section of the big four accounting firms, that doesn't mean you shouldn't apply to another area of it. A lot of times the recruiters might coordinate nationally wherever you're at, but they're often split up by region. So if you're not successful in one region, then you might try to recruit or talk to a recruiter in another region. And because of their structure, the big four accounting firms, it also makes it, this member firm approach also makes it a little bit more difficult to move between countries or regions unless you're persistent, because they're not exactly like one firm. You have to coordinate between these member firms to transition. So that's another reason why you might run into that in your career. But if young people and the people that work in the big four accounting firms are more aware of this structure, then you can learn how to use it to your advantage or to avoid mistakes. Like you're going to run into this on your client engagements, because you're going to have the biggest clients in the world, but you're not going to be that coordinated between regions. And it's better that you know it now than in the future. But also, I think the big four accounting firms, they like to build up their brand into one brand, but they also like to avoid risk. And I think the way they've built up their brands now, it increases their ability to be completely regulated, as we saw in the U.S. with senators in the U.S. calling them to Capitol Hill to answer to why they're helping multinational clients avoid taxes. So I think the big four accounting firms need to be a little bit consistent with the brand, because they like to consolidate all their good acts into one brand, but then they like to diversify the risk. But I think if they have to be careful, because if a partner in a smaller region isn't aware of what the bigger region like New York or Washington, D.C. is in the U.S., then all of a sudden his brand reputation is destroyed as well. So I think the structure is advantageous to some extent, but it's also disadvantageous in a lot of respects, not only to the firms themselves because of all the risk that they get with all the fraud that goes around. Like one member firm, which might be small, exposes the firm to tons of risk. And we see this with KPMG and Carillion in Europe. So it's good for people to be aware of the way this structure is. Not only people that are going to recruit with Big Four, but regulators and these top global firms and the global chairman of the Big Four accounting firms also needs to be a little bit more. I think they need to be held more accountable, because I think if they're at the top in the structure, then they need to be more accountable for the policies that the Big Four accounting firms implement. But those are just some thoughts I had, and something I wanted to bring up today. Make sure to subscribe to this podcast to get future updates, and check out the show notes for helpful links. Thanks for listening.